CRE Deep Dive, hosted by Bamford. We go behind the scenes of high-level commercial real estate, breaking down deal structures and advanced capital strategies, including self-directed IRAs that move investors from Wall Street into real assets, real deals, real execution, real control over your wealth. Let's get into it.
Welcome to CRE Deep Dive. We're with Paul today. He's from Equity Institutional Services, and he's going to explain to us the ins and outs.
Wonderful. Thank you very much, Dennis. Really appreciate the opportunity to join you today here. And yeah, very much so excited to go ahead, speak to self-directed IRAs, solo 401ks, and how people have been going ahead using their retirement funds to invest into alternative assets like real estate for the past 50 years, and how they can go ahead, use these funds, not only to diversify their retirement portfolio, but get into some hard assets and really multiply through some growth.
Yeah. That's, what is it? Is it 35 trillion or it's some crazy number that's tied up in 401ks that we need to get out there in the marketplace, right?
That's exactly right. So it's $1 trillion industry, right? And it is widely vast, and a lot of people will be invested and find themselves in the public markets because that's where their parents invested, right?
Yeah.
And that's where they find their funds by happenstance, because most people don't even know this is an option.
I think we talked earlier, and that was just 8 months ago that I learned about this, and I'm like, why in the world why don't we all know about this? You know what I mean? Yeah, the W-2 jobs shove these 401ks at you, but it never say anything, and there's a reason for that, right?
That's just it. And there's quite a difference between our group here at Equity Institutional Services and a lot of other custodians, right? And a huge driver of that is going to be, what does that mousetrap look like, right? What is their incentive as the bank to go ahead and participate? And with a lot of those traditional custodians, think Fidelity, Schwab, JP Morgan, T. Rowe Price, what have you, right? A lot of them are going to be concerned with something called assets under management, AUM, and they're going to be very interested in going ahead and having you invest into their proprietary products and funds, because that is really where they earn their revenue on, is through that lens. Where our institution, we're concerned with a completely different metric, that being assets under custody. We want to go ahead and be the bank and hold it on your behalf, which opens up a ton of options when it comes to investments.
For sure. Yeah, why don't we just go down a short list? You don't have to name them all because there's a bunch, right?
Yeah, it'd probably be easier to start with what you can't invest in, right?
True. That's very
we'll start there. And there are a few items, right? The first thing is anything that's going to be federally legal. So cannabis is on the no-fly zone until if it were to change federally, that would change as well. Any life insurance you're not able to purchase with those retirement funds as corporation stock, but most importantly, art and collectibles, because the IRS isn't able to determine what to tax you on them due to them not having what's known as a fair market valuation.
Right.
So common things that people will go ahead and invest in: private equity, real estate, right? Going ahead, investing into a syndication is going to be a very common type of investment. Real estate property is going to be a very another option. Venture capital, going ahead, investing in other entities, secured notes, futures, foreign exchange trading, the list goes on and on.
Yeah, it's huge. Yeah. All right, let's see. So let's get into some brass tacks of how you would get into Equity Institutional Services 401. So IRA, self-directed, what is the definitions here?
Yeah, great question. So when it comes to self-directed, that's one big marketing term used in our industry. It's going to be an IRA just like any other, that's going to have the same set of rules and limitations. What's really going to change is who's in that driver's seat, right? What custodian are you actually using? And do they have that client service team to make it administratively possible to actually get you in the real estate deal or into that specific offering that you're looking to go ahead and invest that capital into? What that process would look like. More often than not, when I get a phone call, when somebody picks up the phone and rings me, it's when they leave their employer, right? That's going to be a very common reason that people will go ahead and take the step into self-directing, is when their retirement funds become available to them. So when a person leaves an employer, they now have access to those retirement funds and can do what's known as a direct rollover from that 401k plan into an IRA from one financial institution to another to ensure no taxable event occurs. But then you would go ahead and use those IRA funds to invest directly into that project. Other common instances, IRA to IRA transfers, but there's tons of other plans out there as well, right? 401k is just the first one that typically comes to our mind because it's very popular in trades and industry because it's very cheap for large employers to set up. That's one thing. But there's so many other accounts out there. There's thrift savings plans for uniformed guard members.
Yeah.
Those can also be used once when they separate from service, become veterans, and can be rolled over as well. And I've certainly helped assist a lot of individuals go ahead, use those types of accounts too.
Okay. Yep. Also, can't you use the HSAs, health saving plan and stuff like that? Okay.
Yes, I actually just helped an investor yesterday go ahead and transfer their HSA over to make a real estate investment.
Wow.
And typically it's going to be a family plan because they have that higher contribution limit, but this was an HSA self-only coverage, and they were still going ahead, putting those contributions away on an annual basis. Their HSA was in a low interest bearing account. It wasn't getting a lot of return on it. And now they're going ahead, self-directing it and earmarking a portion of it for those real estate deals, which is awesome to see. But go ahead.
No, go ahead. Finish what you were going to say.
But to your point, even a Coverdell education savings account can be used too. So it doesn't need to just be the HSA. It could be that account typically set aside for tuition, room and board, books, right? I mean, we can use those accounts as well to go ahead and fund these types of investments. So many different options out there. And if you have a plan, please feel free to reach out. If you have a defined benefit plan, a qualified annuity can even be rolled over. We'll see other types of accounts such as 403Bs and 457Bs as well. Those are going to be from different groups such as local officials, people working for 501(c)(3)s, as well as educators, right? So they can also go ahead, take those accounts, roll them over into an IRA product to place that alternative investment.
For just an example on those HSAs and the educational, now, is that going to be the same thing as the separation from the employer to get to those?
Yeah, really good question. So those are typically actually treated more like IRA to IRA transfers. So you're actually able to go ahead and move those as you see fit. So it's going to be different from that 401k movement of funds.
Even if you're still employed?
Correct. So it's going to be similar to a trustee transfer with those IRAs, where we would actually initiate the request of funds on their behalf.
Wow. I just learned. Yeah. You just blew my mind. That's crazy.
And another thing I want to point out, Dennis, is even if they have an active 401k, it doesn't mean all the time full end stop. There's still what's known as an active in-service rollover. So not every 401k plan documents are created the same, right? But some will allow for these in-service rollovers where you can still be employed with the employer and still access those funds via direct rollover. It's a question worth asking every time. Worst case scenario, they're going to tell you no, you were in the same exact seat you were 10 seconds before you asked the question.
Right. Yeah. But it doesn't mean that you can't take some of that money from the 401k and do an in-service loan to yourself and open up the IRA. And that amount is what, 7,600 this year?
We just need to be careful about the earned income portion of that. So we just need to ensure that you can tie that amount that you're contributing to having earned from some type of effort.
So there'd be some kind of documentation and
it's either like a W-2 or 1099, some type of, or like a sole proprietorship, some type of earnings to go ahead and contribute on.
Right. So, but if you pay that back, you're not going to get penalized, right? If you took a loan.
Correct. If you pay, you can go ahead. When it comes to those 401k loans, they're typically going to be prime +1. So that's what you're going to be seeing for those interest rates as you pay yourself back with a 5-year loan term is what we say.
Yeah. But if you can get into a note or another investment that's making 8+, that's
well, that's just it, is going ahead and leveraging the funds that you have at your disposal.
Yeah.
A lot of people will go ahead and they will roll funds over to ensure they're diversifying. To your point, right? And that note's going to be to CD,
Yeah.
probably close to 2x.
Yeah.
So to your point, a lot of investors are looking to go ahead, move some of these funds, put them into other positions so that they can see better returns.
Yeah. Okay, let's get specific about some timelines and processing of the paperwork for specifically for real estate investments, like
Yeah.
purchase and repairs, and then on the sell, what kind of timelines if we're needing money to do a repair, or let's start with the purchase of, how
Yeah.
long would it do to process that if you're getting into a property? And so there's two different, there's the passive and then there's the
Correct.
active. So we,
Correct.
yeah,
Yeah. So it's really going to determine what your goal is, right? And what your end case is here, because there's a couple different ways to go ahead and get into the deal. Let's use the passive example first, right? Normal SD IRA is typically what most investors will go ahead and use to accomplish this. Now, if they're going to be moving from a 401k or thrift savings plan and employer plan, typically will take 2 to 3 weeks for us to go ahead and actually receive those funds and have the funds clear to where we can send them via wire. Now, if it was done via IRA to IRA transfer, that timeline is going to be a lot closer to that 2-week mark. The reason for is when the employer funds are rolled over, we actually receive a physical check in the mail that we'll go ahead and need to hold for 5 days to deposit before we'll send the funds.
right.
So that's the different week timeline between the employer rollover and the IRA transfers.
Gotcha.
Now, after we go ahead and get that taken care of, we would then send you a DocuSign of the agreement that you're going to endorse between your IRA and that third party. And then we'd also have you call in for verbal authorization. After we get those two pieces and the funds, we're able to go ahead and send that wire the morning after in terms of timing. But let's say you wanted to invest into real estate property, right? You wanted to go ahead, purchase a single family home, duplex, what have you, lease it out, Airbnb. What you would do is you would go ahead, follow that same process, roll over funds, transfer funds, but simultaneously, you would be interested in creating what's known as a checkbook IRA, which is an IRA that owns rather a single member manager managed LLC that you can now use to invest directly out of. Now, this is going to give you that limited liability protection veil, which is going to be important for those tenants, right? In case there's anything to ever happen at the property. Now, the second benefit to the LLC portion is the ease of transaction, because you now have an IRA that owns the LLC, and as the manager of that LLC, you now have access to a bank account that LLC owns, which is where you would invest directly out of. It's where you would go ahead, pay for those repairs, any improvements, CapEx to the property. It would directly come from that LLC bank account. Now, the same would be true towards any income derived from that property as well, right? It still needs to flow back into that LLC account, and we need to make sure that we're not commingling funds. And what I mean by that is ensuring that our personal funds and this LLC's bank account are completely distinct and separate. For instance, let's fast forward. Let's say I make that real estate property purchase, I make a sale, I do handsomely on it, funds are returned to my account. Let's say I want to take a distribution, right? Well, I wouldn't be able to take the funds directly out of that LLC bank account. Rather, I would need to either send an ACH or wire from that LLC bank account back here to the IRA, where I could then take a reportable distribution where the amount is going to be reported to the IRS appropriately. And the same is true of any contribution that I want to make for a given tax year. Say I want to contribute, I would never send funds from my personal bank account into the LLC. Rather, I would move them from my personal bank account to the IRA, where they could be reported for the contribution, and then from the IRA over to that LLC to go ahead and use those for those CapEx projects and the like. Just really important that we keep those separate, right?
Yeah.
Because with this, there are rules that apply to IRAs, and one of those are disqualified parties. So an investor would be disqualified to themselves when it comes to going ahead and, let's say, paying themselves a manager fee, what have you, for going ahead and managing that property.
Okay. All right. You did cover that thrift savings plans for the military. You guys, same handles, 401ks are handled the same way. Good.
Yeah, amazing tool to go ahead, start rolling over. And the cool thing about the TSPs is they allow for both pre and post-tax funds. Makes for just very neat positioning if you're looking to maybe make one investment with a pre-tax IRA, another with a post-tax vehicle like a Roth.
Okay. Awesome. Let's see. We covered a bunch of it. I'm going to go over the fee structure and kind of talk about what we
Yeah,
have there. Let me
yeah.
share my screen.
Thank
Is
you
there
very much.
anything before we jump into that? Is there anything else that you would like to add that I didn't ask? I think you covered the basics, you know what I mean, a high level of what's going on, but is there anything that we missed?
The only other item I really would want to highlight is a solo 401k.
Okay.
So this would be a self-directed vehicle similar to the IRA in that you can invest alternatively with it, but it's only going to be reserved for business owners with no common law employees.
Yeah, okay.
So it will be selective in who qualifies for it. But if you're able to qualify for it, you can then make a contribution in a post-tax Roth position of up to $72,000, which is
Okay.
huge. It's
Yeah.
almost 10x of what you could currently do in a Roth right
Yeah.
now. So it's just a really great way to go ahead, supercharge your post-tax savings and wealth creation.
Yeah. Man, that's when we'd have to dive into the UBTI and UDFI and
That's
yeah.
right. And that's
yeah.
another reason why it's a superior account too, is because it's going to be exempt.
Yeah. Awesome. All right. Let me see. Let me share screen.
Wonderful. Thanks again for pulling this up, Dennis. And a lot of our account holders enjoy our fee schedule because it has multiple options, right? So we do cater to two different types of investors, where underneath our first option for our annual fees for our fee schedule, it's going to be locked in at $350 per investment. So flat fixed fee per holding, not looking at the value of the IRA account. Rather, our second option too is going to look at a banded approach. So rather in the second option, it's going to look at the total value of the IRA account, and it will not look at the amount of holdings within said account.
Oh, okay.
So option two, typically going to be more suited for our serial SD IRA investors. Say they have 3 to 4 different investments. We'll typically see a fee break around that point, where option one is either going to be for our single asset holder, or option one is going to be used for that checkbook IRA owner. And the reason that is because even if that checkbook IRA owns 5, 10, 20 real estate holdings, we're only holding one holding, which is the LLC. So we're only charging you that $350 annually, regardless of how many properties that LLC owns or how many investments it holds as well. So another consideration to keep in mind with the checkbook IRA as well is if you are looking to make multiple investments and you are comfortable going ahead managing that LLC, that may be the route. If you are looking to go ahead, invest into one asset, what you can expect to pay is $555 in first year fees through that typical SD IRA, where annually thereafter, it would then be reduced to just that annual fee of $350.
Okay. Yeah. All right.
In addition to that, we also have a $250 minimum cash balance. So we just ask you bring that over in addition to your principal investment. So let's say I wanted to elect to pay for my fees via credit card and I wanted to invest $250,000. I would go ahead and transfer over $250,250 to go ahead and place that investment of $200.
Okay. Awesome. So the sell or registration of or re-registration. What do you mean by re-registration?
So that would be for what's known as any in-kind transfers. So let's say an investor has a holding at one of our competitors that also custodies real estate holdings privately, And let's say they were upset with how their account was being serviced, or they weren't able to get a hold of the group or contact the representative, or maybe they don't even have a direct point of contact there, right? That would be the fee we would go ahead and charge to re-register the asset on our books.
Gotcha.
So we would move it from another custodian and then re-register it to Equity Trust Company as custodian for benefit of all purpose. Account number 12345.
Yeah. So, and speaking of that, like going back to the, I guess any IRA, it's going to have to be Equity Institutional Services / whatever your name is, or the LLC, right?
Good question. So the IRA, so if it's a checkbook IRA, it's going to be owned outright by the IRA. So it'll still be Equity Trust Company that owns the LLC, but that LLC is going to be the one that's going to show up on the deed when you're purchasing and transacting.
Okay.
But that's how it's going to be layered. To your point, exactly. It's going to be the real estate property owned by the LLC, owned by the IRA, which is held by the account holder.
Okay. Gotcha. Anything else on here? I think this is pretty straightforward, self-explanatory.
Yeah. And in terms of what separates and differentiates us is how we take care of high net worth investors, whether it's going ahead, walking through our URL link, pre-filling documents, having that dedicated client service representative. We're here to help.
Yeah, your guys' resources page it's pretty in depth. You got a lot of stuff on here. Your video library it'll keep you busy for a long time.
Yeah, if you're an insomniac like me, you just open up that tab and
yeah. Any place you want to go on here?
Yeah, so I would actually direct us as well, Dennis, to midlandtrust.com too, because that is where our Equity Institutional Services, right where it says click here at that top banner.
Yeah.
Yep.
Okay.
So if you just would have midlandtrust.com in that domain, that's going to be where our investors can go ahead and actually access these accounts as well. So the trustetc.com domain currently is our parent company's, where midlandtrust.com is going to be where I believe we're still going to be located off for that client portal login. So right on this screen is going to be where our Equity Institutional Services site currently lives, although they could totally use trustetc.com for more of those additional resources. This will be, though, where that client login will be and where the actual account will be created for all of our institutional investors.
Okay.
And then you'll see other ancillary stuff like our 1031 exchange business line there too.
Yeah. We could do a whole nother thing on the 1031 exchanges.
We totally could.
Yeah. All right. Awesome. Midlandtrust.com.
Yeah.
It's with the Equity Institutional, which
few
is
different
owned by Equity Trust, right?
Yeah. And a few different pillars. So we were acquired in August of 2023, Dennis, and for a few different reasons. One was our 1031 business. Equity Trust was very interested in helping defer taxes outside of retirement accounts. But another is due to how we serve those investors with that white glove service. In the site, there's other articles where we were nominated by Forbes Advisor as being the best custodian for those private equity investments. Syndicated real estate is something we really get.
Good. Awesome. Paul, it's been great. I appreciate your time. And yeah, would love to do some deep dives on some of these other subjects, because we just scratched the surface, literally just scratched the surface.
Yeah, no, would absolutely love to, Dennis, and looking forward to joining you again.
All right, sir. I appreciate you, and I hope you have a great day.
Yeah, you as well. Thanks again, Dennis.
You've been listening to CRE Deep Dive with Dennis Bamford. If this episode gave you value, share it with someone who's ready to move beyond traditional investing and into real assets. And if you're an investor, operator, or custodian actively working with self-directed IRAs in commercial real estate and have real experience to share, you can apply to be featured on the show using the links below. We'll see you in the next episode.